Hello, everyone. Tim Allen with the Massey Allen Group at Compass. Just sending you a quick message because there's starting to be a lot of news out there about housing, the market in transition, discussions of a recession. How is that all going to play together? So, first things first, what happened in real estate? January 1, we had mortgage rates around 3%. About 30 days later, they're at 3.75%. About 30 days later, they're at 4.5%. 30 days later, they're at 5.25%. There's hints and whispers that they may be as high as 6% by the end of the year. What does that mean to the housing market? Well, the rule of thumb is every 1% mortgage rates go up, buyers lose their purchasing power by 10%. So if we went from 3 to 5, that basically means your $1 million buyer is an $800,000 buyer now. Your $2 million buyer is a $1.6 million buyer. $3 million buyer at January 1 is a $2.4 million buyer now, based on payment. So, with all that being said, everybody's kind of notching down in price point. The bottom end of the market's getting squeezed. The middle and higher end of the market are less affected now. But oh, by the way, we have a war between Russia and Ukraine. We have stock market volatility, raging inflation, so on and so forth. So the question I'm starting to get asked is, are we going to enter a recession, and or is there a housing bubble? So the question about recession is possibly. If we do, through monetary policy and the Fed, they're trying to rebalance the economy. And housing, I'll paint the picture this way: 2008 through 2012, we had more properties out on the market than people qualified to buy them. So the pendulum was swung in one direction. The last 2 years, we've had the opposite pendulum effect of that. We have too little product and an overabundance of people qualified to purchase homes. Both of those are bad or unhealthy for the market. I know it's great to be a seller and watch your value go up double digits every month, it seems like, but from an overall health standpoint of the overall market, it's not good. So, are we in a bubble? I would say no. The big question is what is the catalyst that's going to cause the pendulum to swing the other direction to where we have more people selling property than are willing to buy them? Okay, that's what would cause a housing crisis. And I think people, just because of the Great Recession and the housing crisis, every time you hear recession, you automatically think housing crisis. But if we look back to 2020, COVID caused a momentary recession in the economy, but housing was unaffected, and actually it was one of the leading indicators pulling us out of the short recession caused by COVID. So that's one point. I think the latest stats that I've seen out there in the market is that 30% of properties in the country are owned free and clear, meaning there's no mortgage. So if values went one way or another, those homeowners are fine. And I think 50% of homes out there on the market have 50% equity or greater. So the point being is there's a lot of equity out there. From the housing crisis, one of the factors is we only have well-qualified buyers buying properties since the Great Recession. If you've purchased a home or refinanced a home recently, the requirements are stringent, higher credit scores, a lot of documentation, maybe your firstborn child, blood sample. The point being is we have very well qualified, I'm joking there, but very well qualified people purchasing homes. So that's a point. The other big point is, we still have a 5.5 million unit inventory shortage compared to buyer demand out there in the market nationwide. That means that, and we're only producing 1.25 million units a year. So if we have 5.5 million units needed right now, but only producing 1.25, you do the math, we've got 4.38 years worth of shortage. Okay, and the advantage seller there. Mention that, and just so what do you do with all the information? So if you are a seller or you're thinking about selling, What do I think is going to happen out in the market? Well, there's a lot of noise out there. There's a lot of uncertainty. So those sellers that panic and or their agents that panic are just going to want to get out. But if you talk about the supply and demand, those sellers that are patient and have properties that are turnkey A+ properties are going to do better than middle of the road properties. You either need to be patient or you need to price it to get out. There may be a transfer of dollars. As far as existing home values, you may see a little bit of volatility in values, kind of some turbulent waters. And what I mean by that is you may see one property sell at X value and another property sell at Y value. This property is better than that property. And you're like, is this the beginning of the end? Not necessarily. It just could be that this seller's desire to get rid of the asset exceeded their time to wait for that value or this value, if that makes sense. And then if you're a buyer, what do you do with the information? Because every seller's got to go somewhere after they sell. Well, there's going to be better opportunities out there in the market. We're already starting to see contingencies back into contracts, the ability to negotiate. You're not have to reach so far above the asking price because there's not the competition that used to exist. So if the question I think most people are going to ask, and have been asked, is now a good time to buy? Well, the first question I'd ask you is, why are you considering buying a home right now? So if you want that question answered, give us a call. If you found this video helpful, please share, please comment, respond, give us a call. Again, Tim Allen, Compass, Massey Allen Group. My number is 925-979-5662. Talk to you soon.